Dubai is tax-free. You've heard that 100 times. But what does it actually mean? Because there are different types of tax in Dubai and each one works differently. Some are actually zero, but some are not. And if you set up your company in the wrong way, you might be paying more than you expected. I'm going to break it all down for you right now, simply and accurately. Personal income tax. Let's start with the best news. On a personal level, the UAE has no income tax. Zero. Your salary, your freelance income, your dividends, your capital gains from investments, none of it is taxed at the personal level. This is confirmed directly by the Federal Tax Authority, the FTA, which is the UAE's official tax body. But here is the part most people skip. To use Dubai's zero personal tax in your favor internationally, meaning to stop being taxed in your home country, you need to officially become a UAE tax resident. And that comes with a condition. You need to spend at least 183 days per year physically in the UAE. That is roughly 6 months. Once you meet that, you can apply to the FTA for what is called a tax residency certificate. This is an official government document that proves you are a tax resident of the UAE. You apply online through the FTA's Emara tax portal, submit your documents, your passport, your Emirates ID, your visa, your entry and exit records, and the FTA processes it within 5 business days. That certificate is what you show to your home country to say, I no longer live there, I am a UAE tax resident, stop taxing me. There is also a 90 days path for people who have a permanent home in Dubai and run a business or have a job here, but the safest and cleanest route is 183 days. That is the standard the FTA uses. Now, what if you're not living in Dubai or you spend less than 6 months a year here? Maybe you travel constantly, maybe you are based somewhere else entirely, but your company is registered in Dubai. In that case, the personal tax story does not apply to you yet. What matters now is your company. And that brings us to corporate tax, which is a completely different conversation. The UAE introduced a federal corporate tax in 2023 under Federal Decree Law number 47 of 2022. Before that, there was no corporate tax at all. Now, there is, but the structure is very competitive compared to almost any other country. Here is the basic rule. Your company pays zero tax on the first 375,000 dirhams on profit. That is around $100,000. Above that line, the rate is 9%. And the 9% only applies to the amount above that threshold, not to your total profit. So if your company makes 500,000 dirhams in profit, you do not pay 9% on all of it. You pay 9% only on the 125,000 dirhams above the threshold. Now where it gets interesting is the difference between a mainland company and a free zone company. These are two different setups and they are taxed in two different ways. Mainland is straightforward. You are inside the UAE market, you can sell directly to anyone, and you follow the standard corporate tax rules I just described. 0 up to 375,000, 9% above it. Free zones are a different category. The UAE has over 45 free zones. Meydan, DMCC, Ifza, Rakiz, SPC, Shams, and many others. Companies set up inside a free zone are still subject to the same corporate tax law. But there is an important exception available to them, and that is what changes the entire calculation. If your free zone company qualifies for what is called QFZP status, qualifying free zone person, your qualifying income is taxed at 0%, not just below 375,000 dirhams. Zero, regardless of how much you make. That is the real reason people structure companies in Dubai free zones. Think of QFZP like a status your company earns. The government says, run your business properly inside the free zone, do the right type of work, keep your books clean, and we will tax your qualifying income at 0. There are two things that matters here. First, real presence. Your company needs to actually operate from the free zone. Real activity, real people, real substance behind the license. A license with nothing behind it does not qualify. Second, the right type of income. The UAE government has a published list of approved business activities. Things like trading, logistics, investment management, and services to the clients outside the UAE. Income from those activities earned from other free zone companies or from international clients is what qualifies for the zero rate. Your company can also earn some income outside that approved list and still keep the zero rate, but it must stay below 5% of your total revenue. Go over that in any single year and you lose the zero rate for that year and for the next 4 years. 5 years of 9% on everything. This is exactly why the structure and the accounting behind it matters from day one. There is one more option worth knowing if you are just starting out. It is called small business relief. If your company's total revenue, not profit, revenue, is 3 million dirhams or less, you can tell the FTA you want to use this option. Under that option, your company is treated as having zero taxable income. No corporate tax regardless of profit. There is one more tax you need to know exists: VAT, Value Added Tax. It was introduced in the UAE in January 2018 at a rate of 5%. It is one of the lowest VAT rates in the world. Here is who it applies to. If your business's taxable turnover exceeds 375,000 dirhams per year, you are required to register for VAT with the FTA. This applies to mainland companies and free zone companies alike. Free zone does not automatically mean VAT free. Now, here is the part that matters most for online businesses. If your clients are outside the UAE, you are selling services to people or companies in Europe, the US, Asia, anywhere outside the UAE, those services are zero rated for VAT purposes. That means 0% VAT on exports of services provided you meet the FTA's conditions and keep the right documentation. Most online service businesses that work with international clients fall into this category. Where VAT does apply at 5% is when you are selling to the clients inside the UAE. So for a typical online business registered in a Dubai free zone with international clients, corporate tax potentially at 0 through QFZP and VAT on services at 0 through export 0 rating. That is a structure that makes Dubai genuinely competitive. Let me give you the full picture in one place. You personally, as a UAE tax resident spending 183 or more days per year in Dubai, 0 personal income tax, 0 capital gains tax, 0. Your company on the mainland, 0 on the first 375,000 dirhams of profit, 9% above that. Your company in a free zone with the right structure and the QFZP status, 0 on qualifying income regardless of the amount. Worst case, if you do not qualify, 9%. And to put that 9% in perspective, what is the corporate tax in Germany, in the UK, in France, in the US? In most cases, significantly higher than 9%. So even the worst case in Dubai is likely better than what you're paying at home. The structure is not complicated. What is complicated is making sure your specific business, your income sources, your clients, your activity type actually qualifies, and that your compliance is clean every year so you never trigger a penalty because of a wrong setup or a gap in knowledge. That is exactly where we come in. Getting a random license in a random free zone with no plan and no accounting behind it does not get you any of these benefits. It just gets you a license. At THCM Advisory, we handle the full setup, the right free zone, the right structure for your business model, and we have an in-house accounting team that takes care of everything after that. Your annual filings, your compliance, your reporting, we handle it all so you can focus on your business, not on your paperwork. If you want to know whether your business qualifies for the 0 rate, the link to book a call with me is in the description. And if this video helped you understand how Dubai actually works, subscribe. I will keep making content that gives you the real answer, not just the marketing version. See you in the next one.